All right, today we'll be talking about the funding and the financing dilemma in Nigeria real estate. We'll be discussing how difficult and different challenges and difficulties that developers, builders, contractors that they face when they embark on housing or estate development. Now, in case you are coming across a video like this for the first time, this is Meet the Property channel, and this is where we discuss everything in real estate for first-time investors, avid investors, and real estate enthusiasts, people who are like just curious about the real estate market and the real estate industry in Nigeria, and they want to know how it's performing. They want to know the opportunities, the insights. This is your go-to channel because we discuss everything here, from the jargon, the risk, the profit, the locations, the trends, and everything that you need to know. Basically, if you are putting your money in Nigeria real estate. All right. So let's go straight into the video and discuss the funding dilemma in Nigeria real estate. Before I start talking about this, if this is your second time on our channel, this is your third time, your fifth time, these 6 months, 1 year that you've been watching our videos, we kindly want you to subscribe. We kindly want you to subscribe. It's very, very important to us that you subscribe. Kindly do subscribe. And as shown on the screen also, kindly turn on the notification button so that as we are dropping these videos, you are dropping this content, you get notified and then you don't miss any of them. So a few weeks ago, I discussed about equity versus debt in real estate financing. That's if you want to buy real estate as an investor, a developer, you want to develop real estate and you don't have capital, you can raise capital or raise fund via equity or via debt. Now, generally, or this video will be more specific about the different dilemma and how it's highly difficult for you to raise funds and raise capital for real estate in Nigeria, and how that is also affecting the market. Now, last year, the monetary policy rate of Nigeria was raised like almost 3 times last year. Went to 22% or 21%, went to like 25 or 24%, went to 27%. And then commercial interest went as high as 30% last year. And that's extremely too high for financing and for funding. Real estate developers are one of the sectors that need capital the most. Developers always need fund, regardless of their skill. Is that you are a medium skill developer, you are a low skill developer, you are a high skill developer, high end developer, you are doing luxury, you are doing apartment, you are doing just land. You just need capital. You need funding. And the more difficult it is for developers to be able to access funding, either locally or internationally, the more difficult the market is going to be, particularly for off-takers. Now, for like 24 months now, the payment plan available for properties is reducing. Most developers that are building houses or selling houses right now, even for off-plan, they don't want to do beyond 6 months or 9 months max. You know, for off-plan, though, as they are just starting, they don't want to do beyond 6 or 9 months. Or like before that, you see 36 months, 48 months, 60 months, 3 years payment plan. Most developers now just want to do 12 months the max. At the moment they roof the house, they don't want to do 12 months again. They want to do only 6 months. It's because of the challenge of funding. If I'm collecting 500 million or 1 billion from a bank and they're giving me 35% interest per annum, which means that for 1 billion that I collected, I'm paying 350 million naira as interest. That's too high. That's extremely too high. How do I want to incorporate that considering that I'm doing real estate? Because real estate is not even a sharp investment. Real estate is not like commodity trading where you can buy a commodity today and then next week and sell it, make your profit and get out and continue to turn over. Real estate, if it's a house that you want to sell or it's a project that you want to sell, it takes time to build. It takes time to get the approvals. It takes time to get the permits. It takes time to sell. And then now I have 12 months for me to pay back 30% or for me to pay back 35% return on investment, or to pay back 30 or 35% interest to the banks. It's a dilemma. It's a funding dilemma. So it's becoming more and more difficult for developers to be able to access fund, particularly from commercial banks. Commercial banks will rather put their money in forex trading, despite the high risk there, than for them to fund housing or for them to fund real estate development. More and more developments in Lagos are less funded by banks. Despite the fact that banks are there available and the capital are there, they are not interested to fund. Now, alternatively, developers have been moving to private equity investors to discuss to them and then raise funding for it. So it's just simply developers going to their circle or their network that, oh, at this project I want to do in Lekki Phase 1, I will need 500 million, just give me within 6 months, I'll give you 600 million or give you 650 million, But now that is no longer the case. Why? Because now we have co-vest, cashback, buyback, and all these different names that different companies are giving to this scheme, where you can put in so amount, they go and buy one land in one bush, and then they tell you that, oh, okay, that's the property that we are backing with your investment, and then they tell you 1 square meter or 11 square meter or 10 square meter is also million, and then we are going to buy it back from you in 6 months time or in 9 months time, in 1 year time, and they are offering 40%, they are offering 35%, even some people are offering 50% within 1 year. So if you go to your circle, you go to your venture capitals or private equity investors, and you tell them that, please, I need 500 million as a developer, I need 1 billion as a developer, just give me this money, give me 200 million, and then within 6 months or within 1 year, I'll give you 300 million, 350 million. The person will be looking at it like, are you serious? If I put this money in co-vest or whatever vest or whatever back or whatever cashback it is, I'll collect 40%. 40% of 200 million, that's 80 million. 40% of 1 billion, that's 400 million. I'll give them 1 billion, they give me 400 million. Simple as that. I don't have to do anything. And you are telling me that I give you 1 billion and you give me 1.2 or you give me 1.3. Like you don't need this money. I'll go and give people that will give me 40% or they'll give me 50%. You understand? So this is also creating a funding dilemma also, because now developers have to offer at least a similar rate to these rates, to what these cashback or co-vests are doing, for them to access capital. And in a lot of ways, what this means is, if I have a project that I'm doing, I want to build a house, I want to build apartments, and then I want to access capital, and I have to pay back 40% or 35% within a year. It just means that after I've raised the capital, I need to go and buy land in one bush that I can sell, because it's only land that can give me that return. So it's from the land I can see the return that can, for me to pay back 35% or 40% to people that are funding me. And this 35% and 40% also means that the land that I raise the capital from, I cannot develop that land. And that's why most of the land that you see in Ekpe, you see in Ibejuleki, see that after they have done the fence, they can't do infrastructure, they can't do the road, they can't do the drainage, because those lands were used to raise capital to pay back financiers. Now they are paid back the financiers, they are 40% or they are 35% or they are 30% or they are 50%. There is no way they can develop that land. So the people that actually bought the land are the, I don't know, what do we call it? Are the cash out. Are the cash out for the developers, and are the cash out for the financiers. So a lot of us, we definitely complain that I bought also estate 3 years now, they have not done this, they have not done infrastructure, they have not done this. I bought also estate 2 years now, they not even do the fence, they not even paint the gatehouse, they not even do the road, they not even do the transformer, they not do this. I bought so land 5 years ago, there's no development there, there's no whatever there, blah blah blah, and so on. Yeah, I agree, I concur. But if we come to you for capital, for funding, now okay, we have this thing that we have this project that I want to do, give us 20 million, give us 40 million. What's the return on investment that you'll be expecting from us? If we offer you 20% return on investment, will you do? Will you partner with us? No, because you are going to tell me 20% on return on investment is too small. That exchange rate within 1 year, if you collect your return, it does not make any sense. So, if financiers and funders, either private equity funders, angel investors, venture capitalists, they are asking for 40%, they're asking for 50%, they're asking for 35% return on their funded capital for a real estate project within 12 months, then the people that will be suffering will be the final off-takers, because they will not be able to get all the amenities that they were expecting. So, and all this thing is a cycle. It's going to come back. It's a cycle. You that you fund and you collect your money with return, you too, you bought land now, or you are going to buy land somewhere else. So you too, you be the one that that someone else is cashing out from too. So this funding dilemma is really serious right now, and it's getting more and more obvious nowadays that all this land that developers are selling in Kobakbe, in Moniya, in Alabata, in Abeokuta, everybody is going to now. Ekpe is definitely exhausted. So they are either going to Ogun State side of Ekpe, Ogun State side of Imota, or all the outskirts of Abeokuta. It's almost obvious that all these land developers are simply using it to raise fund, just to raise capital. They are not interested in doing any infrastructure, any development, or improving that land in any way. Because the people that are funding them and financing them already have a high interest or a high return on their neck. And the only way that the developers can meet up is for them to find the bulk land, sell the bulk land, pay back investors, and move on to the next one. That's what it is. They can't do anything else. Now, what am I going to be proposing? Because I am talking about problems without listing solutions. Now, for me personally, I feel 12 months or 6 months funding for real estate should be scrapped. It puts too much pressure on developers. If you are doing any co-vest, any cashback, or any buyback, whatever it is, and there's anybody that is regulating it, or any entity that is regulating it, they're supposed to scrap 12 months or 6 months. If you are putting capital or putting funding into any real estate project, you are supposed to be pledging that fund or that capital minimum 2 years. Minimum 2 years. And then the ideal period for you pledging a capital for a real estate project should be 3 to 5 years. Because that's when the real estate itself can mature enough to be able to provide the return that you are asking for. But within 12 months time, you are giving me 400 million and you want me to give you back 120 million. Hey, I'll first face Lagos State wahala in collecting permits and approvals. Face LSBCA wahala. Face Ministry of Environment wahala. You know, face the inflation in the building materials and cost of construction. That's another dilemma, and that's another wahala. You know, and then face the wahala of selling, because you have to sell before you can pay you. And then I still have to pay you 40%. 40% return within 1 year. You know, considering all these costs. And then again, a lot of people are already looking at our market and they are asking, how are you guys gauging all these price increases? Property is 50 million now before, now it's 75 million. Property is 70 million now before, now it's 100 million. Property is 120 million before, now it's 150 million. How are you guys gauging these increases? It's not our fault. It's because the different developers that are building these projects, they have a financier or a private equity investor that they have to pay back whatever amount that they have collected from that investor in 2 months' time, or in 1 month's time, or in 3 months' time. And the project is where they are going to see the money, where they are going to pay back investors. And investors are asking for 40%, they're asking for 50%. So the only way for them to meet up is also for them to hike the price. Either it makes sense or it doesn't make sense, they have to hike the price. Because they have funders and financiers asking for 40% and they have to pay them back. Around December, price of cement went up, started going up. And I was asking out what's happening. The exchange rate is not going up now. What's happening? So after I did a couple of research, so I realized that the Dangote Cement Group also raised capital earlier in the year. And then I think the majority of that investment capital was also either December or January. So they have to raise prices so that they can meet up to pay back investors. As long as any industry, the people that are funding that industry or financing that industry are asking for a high return on the capital that they are dropping, trust me, the people that are going to be like getting their hands burnt or that will be paying for it will be the off-takers or the final consumers. And that's what's happening in the real estate right now. So people that are buying the land, people that are buying the houses, people that are renting the houses, and people that are like bearing the brunt of the high interest financiers and funders are asking for. And it's not just banks alone. These are also individuals. These are also me and you. If I come up to you with a proposal that you have this project that we are doing, it's going to take us 3 years and or 2 years, and within 2 years you are going to give us capital. Within 2 years we are going to give you back 50% return. Private equity guys are just going to be laughing at me that in 2 years time you are going to give me 50% return. Are you kidding me? Are you serious? Or in 2 years time you are giving me 60% return. Are you serious? When I can collect 40% in 1 year, you want me to wait 2 years and give me 50%? So this is a challenge that we are having, and this funding dilemma is affecting the industry. Now developers just want to sell land and move on, sell land and move on, sell land and move on, sell land, rinse and repeat, phase 1, phase 2, phase 3, phase 4, phase 5, phase 6, phase 7. Sell land and move on, sell land and move on, just put banner, sell land and move on. The only thing they just do is they clear. At that clear, you go there 6 months time, everywhere is bush again. No infrastructure, no improvement. It's because they've got people that they have raised capital from and they have to pay them back. They just have to pay them back. So this is the funding dilemma that we are currently facing in our industry now. And if you have anything to suggest, either you agree or you disagree with my points, that's fine. You can have different perspectives, it's absolutely fine with me. So you can drop your comments and you can let me know what you think. And if there's any also different solution that you feel that can also happen, and please, the government cannot fund real estate. The government have enough trouble in their hands right now for us to tell them that the government can intervene, they can put down. They're already struggling with giving us 24/7 electricity. They can't even fund that. Not talk of funding real estate. So real estate still have to be driven, financed, and funded by, in a lot of ways, private equity investors. But we just have to be more lenient. We have to be more flexible. We have to be more patient. 12 months, 6 months to give developers to recoup so percent, 20%, 25%, 30% on investment is too short and it's too high. That's my perspective. All right. So once again, feel free to subscribe to our content. We have very, very interesting topics coming, and as shown on the screen, we also love you to turn on the notification button so as you are dropping this video, you get notified and you don't miss any of them. And drop your comments. Let's hear your view. If there is any solution different, some of you are finance guys and you understand these games better, so you can also share your perspective, share your experience with us also on what you think the market is doing right now, what you think can solve or can help code up the markets a little in terms of the return, and then help ease the access to capital, ease the access to funding, and so on and so forth like that. So I still remain your number one property on the planet, your property advisor, property consultant, Rabi Mustafa. Thanks once again for watching our videos, and see you next time.